what our private lenders absolutely love, particularly the older, retired private lenders, what they love is they know exactly what the rate of return is going to be. So if they loan me $100,000 on a deal, they know they're going to earn, if they loan me 100,000, 8%, they're going to earn $8,000 for that year. That's an annual percentage rate, by the way. That's not 8% for 6 months or ever how long I'm doing the deal. That's an annualized APR, annual percentage rate. So that's what they love. They love a nice return, very nice return. They love safety, they love security, and they love no volatility.
Welcome to CRE Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network, CRE Radio. Thanks for joining us. My name is J. Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Jay Connor, the Private Money Authority, and in just a minute, we're going to speak with Jay about raising private money. But first, a quick reminder, if you like our show, CRE Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome back Jay Connor to CRE Radio.
Darren, thank you so much for having me come back. I must have done an okay job the first time, or you wouldn't have had me come back. But as always, I'm just so excited to talk about my favorite topic to talk about, that being private money. And the reason is because private money alone has changed and impacted our real estate investing business more than any other strategy in the history of us being in this business, which we've been full-time real estate investors since 2003. So yes, private money, private lending, self-directed IRAs. I'm here to talk all about it, Darren.
All right. Well, before we get going here, if you could do me a favor and just share with the listeners who haven't heard you a little bit about your background.
Sure. Well, my wife, Carol Joy, and I, we live here in eastern North Carolina in a very, very small town, Morehead City, population 8,000 people. Our total target market here in eastern North Carolina is only 40,000 people. And our focus these days, and has been for a long time, is single-family houses. However, I've done commercial developments as well. I've done a shopping center from the ground up. I've done 2 different condominium developments. And as far as private money goes, it's all the same money when you raise the private money for your real estate deals. It's just a matter of how you structure the deals. But anyway, how is it that I'm qualified to even talk about private money? Well, from 2003, when we started, till 2009, January 2009, the only thing I knew to do was go to the local, to get my deals funded, is go to the local bank, get on my hands and knees, put my hands underneath my chin, and say, please fund my deal, Mrs. Banker or Mrs. Banker. And, you know, I had to pull up my skirt and let them look at all my personal assets, and they'd give me a colonoscopy, and they'd pull my credit score and want to look at my financial statements and all this stuff. Well, that worked out okay. The first 6 years, from 2003 to January 2009. And in January 2009, there had to be a pivot. I remember it like it was yesterday. I called up my banker. His name was Steve. Steve and I had been doing a lot of deals for those first 6 years. And I called up Steve, and I had 2 houses under contract to purchase. And I told him the funding that was required for those 2 deals, which that was nothing new. I'd had this conversation with Steve many times. And I learned, Darren, right there on that phone call that my line of credit had been closed with no notice. And I said to Steve, I said, Steve, what in the world are you telling me my line of credit is closed? He said, Jay, don't you know there's a global financial crisis going on right now? And I said, no, but you just gave me a financial crisis. I don't have a way to fund my deals now. And so I hung up the phone, Darren, and I sat here for a moment, and I thought to myself, what am I going to do? Now, by the way, I want to share with your audience right now a very powerful question that I asked myself. And this question that I'm going to share will help fix any problem anybody's got going on at any time. I don't care if it's health, relationships, money, financial, career, doesn't matter. And here's the question I asked myself. I said, Jay, who do you know that can help you with your problem? By the way, these people running around saying every problem's an opportunity, I want to throw up. I didn't have an opportunity. I had a problem. Now, a problem can become an opportunity, but at that moment in time, let's face reality. This is a problem. So when I asked myself, Jay, who do you know that can help you with your problem? I immediately thought of Jeff Blankenship, very good friend. In fact, Carol Joy we just saw Jeff this past weekend at an a cappella gospel singing event, and his wife Megan and their kids. Anyway, so this was back in 2009. I thought of Jeff as to who might could help me with my problem. Jeff was living in Greensboro, North Carolina at the time, investing in real estate. So I called him up. I told him what had happened. I got cut off from the bank. Jeff said, well, Jay, welcome to the club. I said, what club is that? He says, my bank just cut me off last week. I said, well, Jeff, how in the world are you going to fund your real estate deals? And he said, well, have you ever heard of private money and private lending? And I said, no. He said, have you ever heard about self-directed IRAs and how individuals can use their retirement funds that they have? And if they're not happy with the returns, they can transfer those retirement funds over to a self-directed IRA company, loan it out for high rates of return, and earn either tax-deferred or tax-free income. I said, what in the world are you talking about? So anyway, I learned and studied private money, private lending, and in less than 90 days, I was able to attract without ever asking anybody for money. That's what's funny, Darren. I've never asked anybody for money and funding, and I got $8.5 million right now available to me. So anyway, I was able to raise $2,150,000 in less than 90 days without asking anybody for money. And since that time, I've never missed out on a deal for not having the funding. In fact, I got a problem. There's more money than there are deals, quite frankly, to be able to use. So anyway, that's how we got started in private money and private lending all the way back in 2009, and haven't slowed down since.
I love hearing the backstory and kind of the how we got to here. And private money, we've talked a couple of times, and I think you laid it out pretty well that, people with their 401ks and and the ability to access that money and through self-directed IRAs and that. I want to ask you, rather than like from the need standpoint or the you trying to raise money, want to ask you from the standpoint of the lender, the private money lender. What are they looking for? What did you find that piqued their interest when the first call you made and since then? What is it that they're looking for?
That's a great question. So, first of all, let me share this. We've got 47 private lenders right now, and if you don't have any private lenders, you don't need 47. You just need a couple to get started. But anyway, what's interesting, Darren, of these 47 private lenders that we have that are funding our deals, loaning us money on our real estate, not one of them had ever heard of private money and private lending. They didn't know what it was. They never heard of self-directed IRAs. So how did that come about? Well, you see, the way that I attract private money from people that have never heard about it is I put on my teacher hat. I put on my teacher hat. And my teacher hat says private money teacher. And so I would just go about teaching people that I already have a connection with in my cell phone, on my email list or whatever, people I go to church with. And I just started sharing with them what this world of private money is about. So what I did to begin with is I put my program together that I was going to teach, and what interest rate am I going to offer private lenders? How can they get their money back in case of an emergency? What's my maximum loan to value that I'm going to allow my private lenders to loan me? And so I went about teaching them in my own market, or with my own connections. And so that's what makes it so beautiful. You see, I wasn't trying to reach out to existing private lenders or people that had already loaned money out. I wanted to teach them this opportunity. You see, instead of asking for a mortgage, we're offering an opportunity or a program. And I'll tell you another big secret, Darren. I mean, I've never pitched a deal in my life. I've never pitched a deal. And the reason I haven't had to pitch a deal is because I separate, and this is so critical, I separate my conversations with a new potential private lender from talking about a deal. The worst time in the world to be trying to raise money is when you need it for a deal. And for goodness sakes, here's a quote: desperation has a smell to it. Desperation has a smell to it. So if I'm sharing with someone about this opportunity in this world of private money, and I bring up a deal in that initial conversation, I already sound desperate without even trying to sound desperate, because what they're hearing is, oh, if I don't fund your deal, you're not going to be able to do a deal. So we teach the program. They tell us how much they got to work with. Is it retirement funds? Do I need to introduce them to the self-directed IRA company and get their funds moved over? So they're all set to go. And then here's the beautiful thing. When I've got a deal ready for them to fund, I don't call them up and tell them about the deal and ask them, do they want to do the deal? That's the most stupid question in the world I could ask them. Of course they want to do the deal. And particularly if they have moved retirement funds over to a self-directed IRA company, they're not making any money until I put that money to work. So they are sitting by the phone waiting for what I call the good news phone call. So Darren, I'm going to share right now the script with your audience as to how to get your deal funded without asking for money. So there's the important part to realize. And remember, they've already told you they love the program. They love the interest rate. They love how you are going to protect them with a mortgage or deed of trust and maximum loan to value, etc. So here's the script. I pick up the phone. Believe it or not, we actually still have phones with cords here in North Carolina. But anyway, I pick up the phone. I call up, and Darren, let's say you're one of my private lenders. And so I call you up, you answer the phone, and I say, Darren, I have got great news. I can now put your money to work. I've got a house under contract in Newport, after repaired value is $200,000. The funding required for the deal is $150,000. Of course, that matches what you told me you had that you wanted to invest. Closing is going to be next Thursday, so you'll need to have your funds wired to my real estate attorney's trust account by next Wednesday. I'm going to have my real estate attorney email you the wiring instructions. End of conversation. I mean, like, as I said, I'm not going to ask you if you want to do the deal. Of course you want to do the deal. You've been waiting for the good news phone call when I told you I'd put your money to work for you just as soon as possible. And, one mistake that I have seen that's a thread with new fundraisers, real estate investors that are looking to raise capital, is they talk too much, right? If you talk too much, you sound like you're chasing, begging, selling, persuading, right? Keep it simple. Keep it simple, right? Back to you, Darren.
No, I love the keep it simple, stupid. That's kind of one of the rules I try and live by. But so again, with the investor, you've demonstrated that you don't ask for money, It's more of the opportunity and the fact that I think I heard you say you don't wait until you need the money to introduce this topic. You've had your teacher hat on and you've been kind of going around or you've been speaking with prospective investors, and they have I want in. I mean, so there's a sense of I want to do that opportunity so that when you do call, they're they're ready to go. If we back up just a second here in the education process, what is there a single thing or is it just the whole combination of things that you find that appeals most to it? Is it a better interest rate than what they're achieving through their current investments? What is it that you're finding that appeals to the investors to want to be a part of the opportunity?
Yeah, there's three main things. There's three things that these private lenders are looking for, and they really don't even know they're looking for it until you present the opportunity. But I'll tell you what these three things are. First of all is the interest rate, right? Making a lot more money than they are from having their money invested in, say, a certificate of deposit at the local bank, which, by the way, the rates right now are dropping fast. First Citizens Bank right here in Morehead City, North Carolina, 6 months ago, you could get 5.25% for 7 months. Yesterday, 4.25%. It's dropped a whole percentage point in 6 months. And if you want to get a longer term CD, then the interest rate is even much lower than that. Why? Because the banks are anticipating interest rates coming down. So anyway, I've been paying my private lenders 8% or 10% ever since 2009. I pay them 8% for a first lien position loan. And then I'll pay 10% for any junior liens. And I only use smaller amounts of money in second position, like rehab money, 30,000, 40,000, 50,000. And I don't mind paying 10% on that. By the way, there's no origination fees ever in this world of private money. So in first position, 8%. I've been paying them the same thing since 2009 when I started. And people, over the other real estate investors over the last year or so, they'll say, Jay, how in the world are you paying the same interest rate since you were in 2009? And interest rates are like going up out of sight. How are you doing that? I said, well, it's real simple. First of all, remember, we make the rules. We're not applying for a mortgage. Hey, look, you're already approved. You are already approved as the borrower. There's no application process. So we make the rules. We set the interest rate. We set the terms. Secondly, even when you could get 5.25% in the local bank 6 months ago, well, 8% and 10% is a whole lot more attractive than 5% or 5.25%, right? So the first thing they're looking for is a very nice return. You see, we're not joint venturing. They're not getting any equity position. The private lender is the bank, right? So it's like them just putting their money in a certificate of deposit, and they know exactly what the rate of return is going to be. So that's number one, a nice high return. The second reason that they are interested and do business with us, and will do business with you that are listening here on the show, is they want an investment. They want it secure and they want it safe. Secure and safe. So let's break that down for a moment. We are not borrowing unsecured funds. You can legally, but for goodness sakes, don't. Look after your private lenders. So in North Carolina, it's a deed of trust. In most states, it's a mortgage. It accomplishes the same thing. The mortgage or the deed of trust collateralizes the promissory note so that if you don't pay them, the property does. They can foreclose on you, right? So that gives them security. Now, it's safe. How's it safe? Well, our maximum loan to after repaired value is 75%. I did not say 75% of purchase price. That's bank talk. I'm talking 75% of after repaired value. So that's conservative. So the lender is going to have what we call a 25% equity cushion, right? Which means they're not going to loan more than 75%, or you're not going to allow them to loan you. I mean, they don't know what to do. Remember, you got your teacher hat on. You're teaching them what this deal is, right? So you're not going to allow them to loan you more than 75% of the after repaired value. Now, just as a side note, this is why we get to always bring home a big check when we buy without taking any of your own money to the closing table. I mean, who wants to get paid to buy properties, right? So this formula works when you are buying at a substantial discount. Well, how are you buying a house at a substantial discount? Because it needs renovation. It needs rehabbing. That's why you're buying it at a substantial discount. So anyway, secure and safe. The third thing that these private lenders are looking for, and what they love about the program, is that there's no volatility in the value of their investment. So obviously, what am I contrasting this opportunity to? Clearly, I'm contrasting it to the stock market, mutual funds, stocks. So if someone takes their money and invests in a stock or a mutual fund, first of all, they already lost money. They had to pay commissions, they had to pay fees. Well, in this program, there are no commissions, there are no fees. This is a direct transaction with no middle person involved, directly between you and the private lender. So what our private lenders absolutely love, particularly the older, retired private lenders, what they love is they know exactly what the rate of return is going to be. So if they loan me $100,000 on a deal, they know they're going to earn, if they loan me $100,000, 8%, they're going to earn $8,000 for that year. That's an annual percentage rate, by the way. That's not 8% for 6 months or ever how long I'm doing the deal. That's an annualized APR, annual percentage rate. So that's what they love. They love a nice return, very nice return. They love safety, they love security, and they love no volatility.
So tell me, you've got the interest, you've done the teaching, you've got the investors ready for the call. They they lend you the money. How frequently do you pay the interest? Is that upon I mean, is it monthly, quarterly? Is it when the deal's when you're done with it? What frequency do you pay the your interest?
Yeah, that's a great question. I leave it up to the lender. Different lenders have different objectives. For example, some of our private lenders are retired, as I mentioned. They need the monthly income. They don't want to touch their principal. They want to keep that out there. But to subsidize, to complement and go along with the other retirement income they have, they need it monthly. So for them, I'll pay the interest monthly. By the way, side note, we do not pay principal and interest. We don't do P&I. This is interest only, either being paid or accrued, and that's a win-win for all the parties. Interest only is a win for the lender because they make more money. If you're paying principal and interest monthly payments, you're paying part of their investment down, so they don't earn as much money. It's a win. Interest only payments is a win for us, the borrower, because interest only payments are smaller on cash flow than principal and interest. So that's a win for everybody.
Right. So you do give the options as far as how whatever they
Yeah.
want.
So like if I look like I'm gonna be in and out of a property like pretty quickly, then we'll just let the interest accrue and not make any payments.
Right.
I mean, particularly if it's retirement funds, those payments would not be going back to them anyway. That would be going to their self-directed IRA. So on self-directed IRA loans, I'm either going to just let the interest accrue. Now let's stop and think about that for a moment. On your cash flow, you take no money to the closing table of your own, you bring home a big check, and you don't make any payments until you cash out, and then you cash out and pay off the private lender, their principal, and any unpaid accrued interest. But if they're using their self-directed IRA retirement funds, I'm only going to pay that if I'm not letting it accrue. I'm only going to pay that either quarterly or semi-annually. Now I'm not going to let it accrue. Like if I'm doing a buy and hold for a little while, like I'm renovating, and then I'm going to refinance and cash out the private lender, then I'm not going to do annual interest payments. I don't like them checks. Those are big checks. Ask me how I know. So we only do quarterly or semi-annual interest payments.
Got it. You mentioned you've got more money right now available than deals to do. Is that in that situation? Are the is there any interest you owe on the money, or is it just you when you're done with the deal, you pay back all the funds you borrowed, and they're waiting for you to call again?
Right. So I make sure we put the money to work. So if I've got more private money than I can use than the number of deals that I'm doing, which I average 2 to 3 deals a month. Average profits now are about $82,000 per deal, per transaction we do. And by the way, I don't share that to brag. I share that to make a point, and that is you don't have to do that many deals a month in order to have a significant income, even in, a small market. But I already forgot the question, Darren. What was the question?
Well, just the investors or the lenders' capital.
Oh, right, right,
Uh,
right,
do,
right, right. So I run a mastermind, and my mastermind members are actually able to have access and tap into my private lenders funds as well. So we make sure we keep the money invested and deployed, because if it's sitting there, if you don't use it, your private lender is going to find somewhere to put it.
right, right. No, that's good. And your mastermind, how big of a group do you have as far as the
Yeah. Right now we've got 37, 38 members in the mastermind, and I also have another membership called Platinum Plus. There's probably 40 or 50 of those right now. But yeah, we have a great time. In fact, we were just together 2 weeks ago. They all come in here to Morehead City, Atlantic Beach, North Carolina, 3 times a year in person, and we go from 7:30 in the morning until 6:30 in the evening, and then we go eat. Really good. We'll do sunset sails, have dinner out on the water because we live here in a resort area, but we have a lot of fun.
well, that's great. So, we're somebody who's listening right now whose interest has been piqued, uh, and they have the need that they're trying to turn into an opportunity. Uh, what would you advise them on how to get started?
Well, here's how you get started. I'm going to answer it 2 different ways. First of all, you got to get your mindset right. I tell people until you own the real estate between your ears, it's going to be hard to own real estate traditionally, right? So, what I mean by that is remember, in this world of private money, you're not asking, begging, chasing, persuading, trying to sell anybody. You're actually leading with a servant's heart. And I mean, Carol Joy and I, we have received numerous handwritten notes over the years of how this program that we have offered people, how it's changed their lives, how it's changed their retirement years. So you want to get the mindset straight first. In addition to that, how can they get started? Darren, I am so excited. I just recently launched my brand new Private Money Challenge. And what is the Private Money Challenge? Well, this is a series of 7 videos, and they're only about 15 to 20 minutes long in length. But the Private Money Challenge gives just a great foundation to how to raise a lot of money very, very quickly without ever having to ask for money. And I share my scripts and exactly, what I say. So I invite your audience to go to www.privatemoneychallenge.com. Again, that's www.privatemoneychallenge.com. And I promise you, you're going to learn how to raise private money. And at the same time, we're going to have a lot of fun together. I'll be right there on the video with you, engaging with you. And I say, if you can't have fun while you're doing it, then don't do it.
Well, that's great. Hey, Jay, if we could, I'd like to shift gears here for a second. As I've mentioned before, by day I'm an insurance broker. And as such, I work with my clients to assess risk and to determine what to do with the risk. And there's three strategies we typically consider. We first look to see if there's a way we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And if we're unable to avoid nor minimize the risk, we look to see if we can transfer the risk. And that's what an insurance policy is. It's a risk transfer vehicle. And as such, I like to ask my guests if they can look at their own situation. Could be the Fed, the political climate, interest rates, whatever it is that you identify and consider to be the biggest risk. And again, for clarification, while I'm an insurance broker, I'm not necessarily looking for an insurance related answer. And so if you're willing, I'd like to ask you, Jay Connor, what is the biggest risk?
Well, when you ask that question, Darren, the first answer that comes to my mind is definitely not a traditional answer. I'm thinking about Charlie Jones. Charlie Jones is known for his quote that says, within the next 5 years, there's two things that will have the biggest impact on your growth within the next 5 years. Those are the new people you meet and the new books you read. So my answer to the question, what do I see as the biggest risk? The biggest risk I see is someone being happy with the copacetic and the static and missing out on all the opportunities that this world has to offer and that God has to offer. And how can you learn about these opportunities? Is what Charlie Jones says. The people you meet and the books you read. My good friend Tom Kroll, who was the founder of Wholesaling Inc., which was the largest wholesaling instruction company in the nation. Tom preaches, read 8 pages a day. Just read 8 pages a day of a nonfiction book, autobiographicals, biographies, self-improvement. Do that, commit to that, and join very reputable networking groups or masterminds, people of like-minded goals. So the biggest risk that I see, Darren, are people missing out on all that there is out there to be offered by staying static and not embracing and being committed to self-growth. By the way, just as an aside, success is a lousy teacher. Success is a lousy teacher. It's where we fail, it's where we make mistakes that we actually grow. I was so blessed 6 weeks ago to meet John Maxwell in person and have a chat with him. He was our keynote speaker, one of the masterminds that I'm a member of. And the audience member asked him, says, what's the one thing that you attribute your success to? And John Maxwell says, well, I just fail more than anybody else. He said, our wins are only about 30% of what we try. But if somebody else tries 10 new things, they fail 7 times, they win 3 times. I'm going to try 100 new things. I'll fail 70 times, but I got 30 wins.
No, that's beautiful. I love that. Yeah. My parents always said, I could have told you, but you wouldn't have learned anything. So that was always kind of
That's right.
another mantra. So
Yeah, it's
plenty of lessons.
Pain is a wonderful teacher.
Yeah. Amen to that. Hey, Jay, where can listeners go if they'd like to connect or learn more?
Sure. So, of course, www.privatemoneychallenge.com. And then I'm very, very easy to find on the internet, www.jayconner.com, JAYCONNER.com. And by the way, Darren, I'd love to invite your audience to come check out and listen to my podcast. We are now in our 8th year of podcasting. And the name of my podcast is, I know this will be hard to believe, the name of my podcast is Raising Private Money with Jay Connor. You can also find me on YouTube, all your podcast favorite platforms. Come join the party. I always have amazing guests on the show. I release the podcast twice a week, early on Monday mornings and Thursday mornings, and I'm all the time interviewing other real estate investors as to how they have gone about raising private money and how they do it.
Awesome. Well, Jay Conner, I cannot say thanks enough for taking the time to talk. I always enjoy talking with you, learn a lot, and look forward to doing it again soon.
Thank you so much, Darren. God bless you.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all I've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.